Welcome to another brand new episode of Policy in Wonderland. I'm your host, Evie. In Policy in Wonderland, just like Alice, we are going to explore and see the wonderful world of insurance, InsurTech, and everything that's connected to this amazing ecosystem. In Policy in Wonderland, you will meet startups from all over the world, key figures, brokers, initiatives, and more. So without further ado, I want to invite my guest to join me as we go down the rabbit hole. Please welcome Charlie Sidoti from InSure. Hey, Charlie.
Hey, Evie. Thank you very much. Happy to be here. This is great.
All about InSure, but before InSure, I want just to talk about you and your background, your journey. And so let's start from the beginning. Tell us about yourself and your current role in the insurance space.
Thank, thank you very much. It has been a journey for sure. I started in the industry way back in the late 1980s as a ocean marine underwriter, but very quickly moved into kind of the engineering roles at St. Paul Companies, which is now part of Travelers. I spent 20 years in property casualty commercial insurance with a few different companies, and really touched kind of every part of commercial insurance: large accounts, small accounts, property accounts, casualty accounts. But then I moved to insurance adjacent analytics, worked on some startups, mostly focused on risk assessment of different kinds, selling back into the industry, working with the industry, which ultimately led me to, in 2019, founding InSure. InSure is a nonprofit focused on innovation in insurance, and everything we do is just related to climate change. And we got to this, and we could talk more about InSure in a minute, but based on my experience and just my understanding of the industry's history, insurance has a really big role historically in providing a safety net, providing kind of societal value to individuals and companies and whole communities in helping them manage risk. So that's kind of why we founded InSure as a nonprofit. We really wanted to focus on that insurance as a vehicle to kind of protect people at where we wanted to kind of focus innovation efforts.
But what led it to creation and what the problems does it aims to solve?
Yeah, great question. We originally started as a broader focus. There was a lot of kind of activity in 2019 around InsurTech, and we were focused a little bit more broadly. But one of the first things we did, we really looked at where InsurTech investment was going, with that kind of idea of the societal role of insurance in the back of our head. And what we noticed, one, was that the insurance industry does less R&D than other sectors. And we specifically started to look at, like, well, what type of R&D and what type of innovation was being focused related to the evolving climate risks that we were, seeing, and, we were hearing a lot about, like, what's going to happen in the future. And what we realized, where investment was being done in insurance related to climate risk, a lot of it was going towards more sophisticated models that could be applied in ways to better select risk from the company, the insurance company perspective, which we observed was leading to large and growing protection gaps that left people uninsured. In the United States, like 50% of people are uninsured for catastrophes. So we identified that as a big problem. And then as we were thinking about the protection gaps, like on catastrophe insurance, we also noticed that in the mitigation space, where like decarbonization was happening, there was a tremendous amount of innovation on the technology side related to how to decarbonize and transition the world to a low carbon economy. but a lot of those technologies were new, and some of them were, the risk kind of profiles were unknown, and there was a protection gap there as well. So how do you insure some of these technologies? So we saw
But
this kind of dual protection gap issue as the problem that we're really trying to solve.
before we elaborate more about the protection gap, I want to go step one step back because I want to understand the problem, the current state of the insurance market, um, how it's related to the climate change, a cat risk, how it's affecting consumer and policyholders. We are recording today on the Friday the 13th, and what's happening right now? It's like what's happening right now with all the natural disaster that around us is a bit reminding of horror movies. So let's. I would love to hear you the current state, your perspective you on the current state, and we will go from there.
Yeah, I think the it's a great point. I forgot that today was Friday the 13th, and it is sometimes when I look at some of these things, it does feel like a horror movie. But the business of insurance is a business for sure. And the advance of more sophisticated analytics is great in a lot of perspectives. But the historic role of insurance has often been pooling of risk. So a lot of these advances in kind of analytics and be able to more precisely price risk at an individual location, it undermines the pooling effect that was like just required because you didn't have those analytics in the past. So people just got together and said, we don't know where the loss is going to happen. Let's pool our money and spread the risk. And there's, insurance still does provide a lot of that, but what you're seeing is, the companies are very sophisticated or getting more sophisticated at pricing risk individually, and that is leading to affordability and accessibility issues, which are manifesting themselves as protection gaps. And it varies, public policy and kind of regulatory kind of regimes have a lot of effect on this as well. But you're seeing protection gaps everywhere. And Swiss Re has a great site where you can kind of go look at your, like, globally, and then drill down into different parts of the world and different countries and see what the protection gap is in the United States about. And it varies depending on the types of losses, if there's like a big hurricane season or other types of losses, but it's often 40 to 50% of catastrophe losses are uninsured. And so if you just think of 50%, if there's $1 billion loss, 500 million goes into the insurance system, and it is accounted for at a very high level of detail. But the other 50%, it goes somewhere, and there's not clarity on where that goes. Some of it lands on the people that don't have insurance, but local communities also do support their citizenry during times of disaster. So some of it lands on the local community, some of it flows up to the federal government, some of it flows to philanthropies, and so that kind of opaqueness around the accounting of the uninsured losses is a real problem because it requires investment to invest into adaptation. It requires, if you're going to fund these losses, everybody says, well, why should I pay for it? And people think others are paying for it. So it makes it extremely difficult to take action to pre-fund and manage the losses and invest where you need to invest. So we think there's a lot of problems with that protection gap. Besides, it just leaves people, especially the most vulnerable people in our communities, most at risk. They are the ones. It's often smaller losses in vulnerable communities that wipe out the most wealth. Like if you're a poor community, the losses might not be as big, but as a percentage of the citizens' wealth, it can be very high. Like generations of wealth can be wiped out in some relatively small losses. So it's a real problem for communities for sure.
A question about what kind of risk are currently not covered? Let's step in because we say climate change is affect insurance and there is a lot of risk. What kind of risk, especially in property and casualty, because this is like the two the background of the both of us.
And it's a really good question, and that's a key thing we need to answer, kind of geography by geography. It varies. So public policy makes a big difference. You see in like the UK, I think the protection gap is significantly lower than in the US. And if you specifically look at different types of hazards and different types of losses, the UK has done a better job around some of these flood issues. So their flood protection gap is much smaller because of public-private partnerships that they did. Where in the United States, like
Remember,
90%, yeah,
yeah, sorry to jump in, but I remember I looked at the London city map, on London city map, and I check, for example, of businesses, bar, restaurants, and I could understand if there was a flood from the near tunnel or not,
yeah,
and
yeah.
it was amazing.
Yeah, so and they've done a lot of work at building kind of public-private capital stacks to provide insurance to those different, stakeholders that are in different kind of flood hazard areas in a way that also promotes like mitigation and investment in adaptation. Where in the United States, like flood is, I think, it's more than 90% of flood losses are uninsured, which is a
Ninety
problem of
percent, 90%.
90%. Yeah. Yeah. So that's high. But then also on like some of the other ones, it's really hard to determine because like what you're seeing is a lot of when you get to like the wind and some of the weather um issues, maybe a very high percentage have insurance policies, but the terms and conditions of the policies have been changing, where
Mm,
deductibles are going up and often they're percentage deductibles, and like in places like California where you have high kind of value homes, and this affects the wildfire as well. If you have a percentage deductible, a percentage of a large value home can be, tens of twenties or thirties of thousands of dollars. So those are fairly significant kind of deductibles, which again, if they land on people that don't have discretionary kind of wealth to respond, it causes real problems. So there's not clarity on exactly where the protection gap is. There's lots of studies at like an aggregate level what it is, but when you get into individual communities, there's not really high fidelity data on which part of the communities or which type of hazards. We think that's like certainly an innovation opportunity for different kind of innovators to figure out, and the regulators too are trying to collect data that they can make available to researchers and innovators to identify where the actual kind of challenges are so that solutions can be designed to really kind of focus in on where the biggest problems are.
so we understand that insurance need innovations, and you mentioned earlier that insurance companies don't have like an R&D sections, um, and especially in climate change, as you mentioned right now, that we need to close the protection gap using data. Um, what is the added value of InsurTech companies here? And by the way, not just InsurTech by definition, insurance tech company, but tech companies in
Yeah,
general.
it's a really great question. I think
Thank you.
one, if you really close the gap, that's a massive market that you're kind of accessing. So it behooves the industry, including the corporates and the insurtechs and others, to figure out how to do this. There's and the way we look at it is it is, like you said, it is more than just the InsurTechs and even more than just the corporates, because this is a societal problem. Some parts of these communities are really difficult to insure, and some might be uninsurable. And eventually, if climate it gets worse, and it will get worse, it's going to really lead to some really tough decisions, including things like managed retreat. People are going to have to move. There's going to be there already are kind of climate refugees, but how we transition that can be, very painful or less painful. And I think that gets to the solutions. So some of these solutions will be developed by insurtechs and corporates, often working with the public sector. So these public-private engagements. And we believe, I think there's different ways to do this, certainly. The federal government and even like global
Mm.
institutions have a role, but we think that the best place to do this innovation is a community up approach. And the reason we think that is um, it is community leaders that control infrastructure, land use, and building codes. Those are the drivers of resilience, or like a lack of resilience. And they don't really think about insurability so much. Insurability is different than resilience, because insurability it's related to resilience, but it also reflects like corporate appetites for business, capital availability. So insurability is different than resilience. But if we think if you can kind of get community leaders as part of their economic development planning locally to think about how their economic development plans affect insurability, they can shape the insurance markets through investments into adaptation, but also things like group purchase of insurance, which we can reimagine how insurance is delivered in a way that drives resilience to uh, individuals and enterprises and communities, which the innovators that kind of create products help communities actually do this. There's huge markets to be had, we believe.
Last week on September 2, the second, I wrote an article about the big fire of London, 1666.
Wow.
And for me, is it's very related to the topic that we are talking right now about climate change, because is the time that fire insurance change, and as we are familiar today, because there are smoke detectors, fire departments, and so on. And for my thesis is that right now, about climate change, about climate risk, there is the ability to elaborate more about preventive solutions. And this is, from my perspective, is like going to be the next insurance model, because especially about climate,
Yeah.
need more preventive solutions, even for communities, as you mentioned, and personal homeowners. And do you really think that we are going to see a big change in the insurance model as we know it for today? For example, I heard a podcast of New York Times, I think, about the climate change, about the floods, and there they also mentioned about we are going to see a big like something will happen to the insurance, to the model of insurance as we know it for today. So,
We absolutely think so. If the protection gaps get larger, I think in leaders of insurance companies often worry about the economics of the losses, and could we lose money and how much could we lose, which I mean that's their job, that's what they need to do. But I think the bigger risk is if 50% uninsured for catastrophe or 40% for uninsured for catastrophe, people are already angry. if it gets to like 60 or 70% are uninsured, like it doesn't matter if you say, well, this is a risk issue, not an insurance issue. If you're only insuring 30% of the catastrophe, the public and the regulators are going to think the industry is irrelevant. Like, they're, what are they doing? So I think the danger to the industry of not really leaning in and solving this is, they risk much more regulation and also much more kind of rejection by consumers to say, like, if you're not going to help us deal with the main issues, like, we don't need you. We will figure it out ourselves. We will build our own capital stacks to fund our own losses. And I think the thing that you,
like the captive insurance, like do
yeah,
more.
exactly, exactly, captives and kind of mutuals and reciprocals at a community level. We think you actually, there's a trend already in that direction. We think it's only going to accelerate. But I think also the other thing that you mentioned earlier when you talked about like smoke detectors and kind of the role of insurance, the industry has had a very big role in engineering risk. And we always tell the story of like when electricity came in, they demonstrated at the World's Fair, and the insurance industry was there, and they said, "Oh my God, like this is going to burn down buildings and this is going to kill people." And what they didn't do is they didn't rush back to their, their companies and say, we need to exclude electricity, any homes that have electricity. We need to raise prices. What they did was they threw an army of engineers and they created underwriter laboratories to make electricity safe and insurable and create a market for insuring buildings with electricity. And Underwriter Laboratories still is around today, and they have like about a $60 million budget, and nobody worries about electricity that much, and because it's safe and insurable. And the industry needs to lean into these climate changes today, and we see innovators are doing this, and we see some companies are doing this with not just actuarial kind of expertise and legal expertise to build kind of coverage forms and policies, but also engineering expertise to help communities and help the innovators on the decarbonization side on all this renewable technology to assess the risks, engineer the risks, and figure out how to make everything insurable so that products can be provided in an affordable and accessible way to markets that need insurance protection.
Could you tell us about a couple of InsurTech that was like blow mind for you? On fire, floats, you name it.
Yeah, so there's so many. So let me just rattle off a few. Like, there's a company, Vibrant Planet, that does some really cool modeling around wildfire. And what they answer a very key question, which is like, what is the benefit of different types of interventions like home hardening or defensible space or even kind of land level kind of treatments, in a way that helps you kind of community leaders make decisions. And they've been starting to work with the insurance industry and say, hey, we can quantify value kind of at scale. How can we bring this back to the insurance industry to capture that value in insurance markets? So that's one really interesting one. There's also a bunch of like this Rick Microsystems. I think I got that. I know it's Rick. We love Rick. But they're a parametric product that's micro insurance that really can provide like $10,000 flood limits for like $15 a month. And this gets to that point I made earlier about like vulnerable populations with low wealth really just need that buffer to say, like, I need the money to you know to, to to just get me, just to protect the small amount of wealth. So micro insurance and parametric insurance. And then you could do that at a group level. Those are some really cool combinations of things that you can affect the financial resilience of a community in dramatic ways without huge investments of capital to like get full insurance. There's also a number of companies working on kind of early monitoring of flood. Some of, ICEYE is doing the satellite stuff, and I forget the names of all these companies. I should know them all. I talk to them all the time. But there's uh, companies kind of doing like early warning at a community level so that the communities can kind of intervene on some of the flood things around, like if there's like we met some company that was doing work around kind of identifying um, when drains were covered, which were causing kind of some of the flash floods, so you could put a crew out there fast and kind of prevent some of these things. There's a tremendous amount of kind of IoT opportunities. Provisico, that's the name, like Provisico. I was trying to think of the name. They're a great company doing some really cool monitoring out of the UK.
How do you see the next generation or the younger generation right now helping us to bring much more closing the protection gap?
I love it. I think they're the key. I mean, we started this organization called InsurTech, kind of like Peace Corps or Marine Corps, and we think a lot of the companies have the corporates have young kind of next generation leaders that are interested in these climate change, in some cases more so than the companies, or they want to push further than the companies. So what we're trying to do is engage them in ways that they can engage outside of their companies and bring kind of ideas back to their companies to be more aggressive at creating kind of new products and services. We really think that it's not just the products and services, but it's the distribution, it's the capital stacks that back them need to be really kind of, climate change is presenting an opportunity to reimagine, and we think it is the next generation of leaders that are really engaged in this issue and that will provide the leadership and the innovation kind of fuel to test and learn and kind of create a different insurance landscape.
So we started to talk about the future. What is the market forecast for demand in climate-related insurance innovations and solutions for that?
Yeah, and it's it's trillions of dollars will be spent on mitigation, like actual decarbonization. And that will lead to tens or hundreds of billions of dollars of insurance market for the technology that is driving that transition. And a lot of those are very new things like carbon capture and sequestration, a lot of the renewables, even some of the mature renewables like wind and solar have risk problems that create unique kind of insurance de-risking opportunities. Um, we also think that the transition is going to change large existing markets like the automobile market. As it transitions to an all EV market, has different types of risks, like the residual value of batteries. That's an opportunity for companies to provide some performance guarantees, or warrant different types of warranties, insurance products that address the new risks that are being created with the introduction of things like electric powered vehicles. We're running a innovation challenge. We're in the middle of it. We're giving away $5 million to innovative startups that are creating insurance products that will accelerate the adoption of those clean technologies. It's funded by the state of New York, which has a very kind of robust decarbonization strategy. So we think there's huge markets on both sides. We also do think the protection gap is going to be closed one way or another. And we think if it can be through kind of private or public-private, like combined insurance products, those are, it could literally double the size of the insurance markets in those areas. So there's huge opportunities all over the place.
Yeah, if we are also get focused about community levels, community product levels, it could be very beneficial, of course, for the insurance market and everyone that will be involved in. But to create a community, InsurTech, so you name it, could be very change. Could be very huge change for the underwriting, for the data.
Yeah, for the underwriting, for sure. Like, how do you do it at a community level? But also for the distribution, like the life, health, and benefits side of the industry, I think is a little bit better at group distribution than the property casualty side. So we think some of those capabilities around, if you think of catastrophe insurance at a group level, you could have like annual enrollments at a community level, which feels like employer-based group insurance. So those are administrative things that need to be solved as well, not just I mean, the underwriting for sure. How do you underwrite? How do you price? How do you make sure it's equitable across the community? It requires a lot of community engagement to actually get people on board for this, if you're going to use tax money for it, or if it's going to be like individuals then purchase it. But either way, it's a really, no one innovation is like super complex, but there's a lot of innovation happening to actually do community-based catastrophe insurance. But it really kind of expands the market dramatically. It puts the power in the control of the community leaders, and it also lets them kind of leverage um, and gain support for investing in adaptation, which is actually what bends the cost curve, because you need to bend the cost curve, but you also need to close that gap so you're like shrinking the amount that's uninsured. You have to do both at the same time, which isn't easy, but it's a great opportunity for the industry to really build kind of new products, services, and markets.
What is next for InSure? Where is the initiative headed?
Yeah, so we are focused on, like I said, both the carbon side. We want to support the startups that are kind of engaging there. We may do some more challenges, but we'll definitely kind of, as we come out of the challenge that we're running for the state of New York, we got over 50 applicants, and we're down to 10 finalists now. We will support the whole pool, and then hopefully we'll kind of get more InsurTechs kind of engaging with us around those different areas. On the community side, we will be announcing some pilots we're doing with some communities to figure out how to, one, quantify the value of adaptation, capture that value in insurance markets. And we really spending a lot of time working with a number of startups, but also some universities and other philanthropies to figure out ways to reimagine insurance in a way that closes the protection gap significantly at a community level. And in a way, I think that can be done fairly easily, but what it can't be done easily is in a sustainable way where the economics kind of can continue that over time without it just being like a philanthropic investment. So we are trying to figure out, and we are going to drive innovation to try to figure out how to do this, how to close the protection gap in a way that the system is more efficient, which is the system of funders, which includes, individuals paying premium, but also disaster relief being invested wisely in both adaptation and risk transfer and capturing kind of values over long-term time horizons. So we're going to be working with communities and working with the industry to figure out how to solve the community's problems. That's kind of the way we look at it, is if we can get in at a local community level, we can then engage with the industry in a way that says, like, this is the problem we're trying to solve, as opposed to trying to build products and then bring them to communities. We think of it the other way around.
Like a startup.
Exactly.
Like a startup. Uh, how can people start getting more involved with InSure or provide solution at the intersection of climate insurance and tech?
Yeah, I think definitely InsurTech is we're trying to, it's a professional kind of membership program where we're trying to get people to engage uh and help us bring our mission forward. We are, like I said, a nonprofit mission-driven organization. But I also think we have webinars, we have an event in New York. Go ahead.
Sorry to jump in, but I signed as a member last week. So yeah.
Awesome. Awesome. We're happy to have you, and we know that you'll get value out of it, because what we're really trying to do is connect people across traditional boundaries in a way that drives this forward for everybody. And so we thank you very much for joining, and your audience are, welcome to kind of engage. There's also, we have events where everyone during Climate Week in New York. We have webinars. We had one just yesterday, I think. And we also want any startup that is focused on improving kind of community resilience as part of their solution. We would love to hear from you and figure out, because we're not solving these problems ourselves. What we're trying to do is bring the broader ecosystem of startups, whether it's reimagining how insurance is or providing technology into a community that then makes it more resilient, that then can feed back to the insurance industry. We're trying to map out all the people doing great work in those spaces. So reach out on our website, or you can send me an email or at charlie@insure.org. We'd love to kind of talk to the startups and see kind of what's going on, and figure if there's ways that we can support, promote what you're doing in some of our projects and or events.
We'll leave links for the website, LinkedIn, in the notes of the podcast. Charlie, thank you very much. It was very knowledgeable, and good luck for closing the protection gap.
Thank you so much. We appreciate the promotion. We love what you're doing, and this is a global problem. So the more we can connect people globally is fantastic. Thank you very much for having me on.
Thank you. Have a good one.
You too.